Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, 20th of October. And my name is Russell Shaw, Senior Market Specialist at FXCM. My email address r@fxcm.com. Just going to go ahead and bring up the high-risk investment warning. I'm going to keep this on screen for a few moments. Just want to double check that you guys can hear me and see the screen. Okay, great. And here's a market commentaries disclaimer. We've got the final day trading webinar later. It's going to be, I'll introduce Remy, but then Remy's going to run with it. I think it's going to be a good one just to round it all off. Here's our references. And I'm just going to bring up this chart, which is the real rate on the daily. We'll talk about it in a moment. Let's just go through the Bloomberg email, which the first headline is on the brink. Liz Truss's premiership looks pretty close to imploding after she fired one minister over a security breach, and two others were heard resigning amid the fallout from a chaotic parliamentary vote before agreeing to stay in their posts. In just 6 weeks in office, Truss has already triggered a run on the pound, been bailed out by the Bank of England, abandoned almost her entire policy program, and fired her closest political ally. Many Conservative lawmakers now want Truss to resign immediately. Meanwhile, the BOE's quantitative easing journey from government cash cow to liability will reach a key milestone with a transfer of more than £11 billion by the Treasury. Second headline, Fed hikes. Federal Reserve Bank of St. Louis President James Bullard said he expects the central bank to end its front-loading of aggressive interest rates by early next year and shift to keeping policy sufficiently restrictive with small adjustments as inflation cools. You do have to think about what the reasonable level is, Bullard said in a Bloomberg TV interview with Kathleen Hayes, suggesting that he doesn't currently see the need to push rates higher than officials have already projected. Bullard has been among the most hawkish Fed officials this year and was the first to publicly suggest hikes of 75 basis points, which have become routine this year as a part of the inflation fight. And I think the whole key there is, well, does that sticky inflation start to give? Next headline reads, Energy Crisis. Europe is loading up on cheaper Brazilian ethanol, tripling imports in order to cope with the energy crisis triggered by the war in Ukraine. Prices for natural gas and power are so high in Europe that some ethanol makers have considered shutting down plants. As in other countries, it's a requirement that ethanol be blended with gasoline in Europe. Luckily, Brazil is stepping in with a more affordable alternative, which could bring down the cost of driving. Demand is so great that companies are boosting production of alternative types of ethanol to keep up. So I'm certainly not a mechanic, but I have heard ethanol is not particularly good for an engine, so I don't know if I'm wrong or right about that, but that's just a thought that comes to mind. Right. Security Council briefing. The US, along with France and the UK, has called for a special United Nations Security Council briefing regarding evidence that Russia has procured Iranian drones for its war on Ukraine. US mission to the UN said in a statement Wednesday that the so-called expert briefing would look into Russian procurement of Iranian unmanned aerial vehicles in open violation of a Security Council resolution. Drones have been deployed in recent Russian attacks on power plants and other installations across Ukraine. About 30% of the country's power stations have been destroyed since October the 10th, President Zelensky said on Wednesday. Coming up for this session, European stocks are on track for declines as bond yields popped amid fears of a global slowdown. EU leaders begin a two-day summit in Brussels. German PPI is out. Netherlands unemployment ahead. Volvo is going to report. Other earnings include ABB, Investor AB, Philip Morris, etc. Okay, so here's our real rate. It's actually moving up. So despite sort of the overbought condition on the weekly, the daily is showing a high yield, and we did read that one sentence, yields have popped. So I think it's worth just keeping an eye on the yield. We've got a reference candle over here. So this is the actual reference candle over here, and then yesterday it took out the high. So instead of using this high, I just made it a little bit more conservative, a little bit more prudent, and used this one over here. We took it out and we closed above it, so that's condition 3. So yields are moving up. Again, the weekly is overbought, but right now the daily certainly does have a bullish reference candle to it. And not only that, the momentum here is starting to move into this 80 area. So if we get into that 80 area and hold, then I would expect to see that the higher yields. It would surprise me, but of course it's we'll be able to monitor based on the momentum, and this is the way the prices are behaving at the moment. And I think that's potentially going to make a life difficult for risk assets. I think there could be a risk of field in the market today if these yields continue to appreciate. If you like to look at the US dollar here, it's not quite as obvious in terms of the bullish reference candle, but there is a bullish reference candle. So yesterday we closed on condition 3. It's a little bit skewed. Let me just. Okay, so there are hints of higher troughs on the real rate and on the dollar. Whether the dollar moves up, we'll see. I think it's going to take its cue from the real rate. The real rate, at some point, that weekly will need a correct. So there's a ceiling somewhere above us, but I don't know where it is. And the stochastic here, well, it's getting to that point where the momentum is entrenching. So if that's the case, one would expect some sort of risk-off feel to the market today, as long as the yields move as seen here. So let's just bring up this chart, and you can see that the DAX actually does have this bearish tail that has started to materialize. And if you go down to the daily chart here, okay, you can see that we had this big red candle yesterday. Now, this is going to be a very interesting session, because if we have the interest rates appreciating, I suspect, despite being in zone 1 and despite the stochastic being above 80 here, it might be short-lived. I think the cue comes from the interest rate market. Again, if those interest rates do pull back, well, then the zone 1 plays out, and then we might get the stochastic sticking around here. But it's an ambiguous situation again. So the ambiguities are there, and that makes it difficult for us. So what do we do here? Do we go long because there is a distinct zone 1 position, because the stochastic is in the bullish area, or are we cautious because the real rate is starting to appreciate? So My feeling is we have to be cautious there, even though I think this is a pretty good position in terms of the zones. The reason I think that perhaps the weaker argument is just that there is a bearish tail that's moving in here. But I think the stronger argument is that we need to just respect the risk that's inherent in this type of situation. The ambiguity needs to clear up. We may, in fact, get that pullback in the real rate. That would be the that overbought condition effectively normalizing. And then we do get this sort of risk-on movement. But the daily chart is suggesting just be cautious, because we've got this bullish reference candle. Incidentally, I thought it would be a good idea just to take a look at the day trading layout under this circumstance and see what it's suggesting. And you can see, well, on the daily, the sentiment is down. Right? It's not a surprise, because we saw that tail that's starting to materialize on the weekly. Okay, and then we go down to the hourly. All right, and you can see here neutral, isn't it? So even on the day trading, it's suggesting here, well, let's just be cautious. The market hasn't quite made up its mind yet, right? And we're in the middle of no man's land. So as we start the day, just taking a look at the day trading, the hourly hasn't synced up with the daily, and I think that precisely shows just the uncertainty that we're starting the day. So I thought that was quite an interesting sort of point. Now take a look. Let's go down to the 1 hour here, and you can see that the real rates are now starting to move. Okay, so real rates are starting to move. They've actually been above T since yesterday, and I wonder if it's going to drag up with it if we continue. Then I think the day trading, perhaps we see some sort of movement back down here. Perhaps we see the stochastic dip under 50, and then, well, perhaps we can see some sort of momentum push here. So that's just the day trading aspect to it, but the ambiguities abound on multiple systems here, right? Lower peak, but zone 1. Let's take a look at some of the currencies. So let's just go through to Euro. And let's get rid of this arrow. So it's quite tough. Just the last 4 weeks here are quite tough. So the momentum is certainly to the downside. The trend is certainly down on the weekly. What we'll do here, I just want to show you the uncertainty on the euro. This is actually going to be quite an interesting exercise. So what we'll do is we'll combine this blue candle with last week's candle. So we're going to combine these two candles, and also we're going to combine the previous two candles together as well, just to get an idea of what's happened over the last 4 weeks. And I think once we combine these 4 candles into 2 candles, we're actually going to see something in terms of the sentiment. So let's start off with the first 2 candles. So let me just make sure everybody's following. I'm not sure if I've expressed myself. I'm going to take this candle, okay, this blue candle, and this red candle, I'm going to combine them, and we're going to get a feel of the sentiment. So the way we'll do that is we'll take the high of the two candles, which is this, and we'll take the low of the two candles, which is here, and we'll just draw in the range, okay, which is round about something like that. And then we'll take the open, which would be the open for the first week, which is over here. And then what we're going to do is we're going to take the close of the second week, and you can already see, well, we've got a spinning top here, like a spinning top, something like that. And it will actually be a closed spinning top because the close is slightly lower than the open. So let's do the same exercise now with these two candles, understanding that this is still an active candle. So how this candle finishes for the week is not known yet. But we're going to take this high and we're going to take this low. Okay? So you'll just do something like that. And here is the open, here is the close, and we get a spinning top, something like this. Okay, so we've got 2 weeks of spinning tops, effectively. I'm not sure I've got them exactly to scale, but there's actually 3 levels of uncertainty in this market. So you've got, let's call this a long-legged spinning top, if there's such a thing. So you've got bulls that have tried to take price up, you've got bears that have tried to take price down. For these 2 weeks, we ended pretty flat. Right now, the bulls are not even trying to take out the previous high. The bears not even trying to take out the previous low. They're just letting the euro drift. So we've got 2 spinning tops, okay, which is 2 uncertainties. And the third level of uncertainty is this is an inside period. Okay, so the ambiguity that we've been talking about, I think, makes itself quite obvious when we combine the last 4 candles, and that's the environment we are operating in. Let's just take a look at cable as an exercise. Okay, let's do the same thing here. So what we'll do is we're going to take this candle, and we're going to take this candle, and we're going to combine these two. Okay. So we've got the high here, we've got the low there, right? Cash open right now, so I'm just getting a little bit of a lag. Just give me one moment. Okay, so where's the open? The open's here. Where's the close? The close is here. So we kind of get something like this. This one would be a blue candle, but it's again, I've classified as sort of a spinning top, right? With perhaps a bullish bias, but you've got bulls that really took price up to there. They lost control, but prior to that, you had bears taking price down to there. They lost control. How are we looking since then? Okay, let's take a look at the next 2 candles, which will be this one and this one. Okay. So here's the high, here's the low. Got an inside candle here again. Okay. So there's the uncertainty that you've got. Here's the open, here's the close. Open, close, so it'll be kind of something like that. Again, I'm not sure I've got the scale exactly right. So the real bodies perhaps suggesting slight bullishness, and I think that's probably reflecting because of the stabilization of the gilt market, so to speak. But take away the the real bodies, you've just got 3 levels of uncertainty: spinning top, inside day. So again, the ambiguity that we're dealing with just over the last few weeks persists, and it's hard to really get the scoreboard ticking when you are in an uncertain environment. I mean, trading trends is just way easier because the momentum works for you. So that's kind of what we're in at the moment. The takeaway there is uncertainty equals heightened risk. So we're in this higher risk environment. That means emphasis on risk control, stop losses. There's always going to be an emphasis there, but the uncertainty now, it's heightened and heightened risk. Let's just take one more look at DAX, and then I think we'll wrap up here. All right, and yeah, you can see this is on the hourly, and there does seem to be some sort of just on the open. We won't know the we won't know the sentiment for another hour or so. The first hour is always very foggy, but there does seem to be some sort of red coming in, and I would suggest that's got everything to do with this appreciation in the real rate. In fact, you can see now that the dollar started to respond as well. Last time we were here, it wasn't a blue candle. Now it's starting to become blue. So I think, subject to correction, there's certainly, I think, a higher probability that we'll have some risk off. And of course, I'm going to just tag on that subject to correction. All right, so I think we'll stop here. If there's any questions, go ahead and type those in. Just want to remind everyone, we've got the last session for the day trading course. It will be 11 a.m. UK at 12 p.m. ZA. All right, no questions have come in, so let's wrap up here. I'll speak to you guys later, and if I don't, have a good day and a good evening, and we'll chat again tomorrow morning. Cheers, guys.